But yeah. Also, I'm back in the Netherlands right now. For everyone who was wondering, um, I was gone for a little while. As and oh yeah, will send the link in here. The link. Rick asks me, the whole team trading from home now. No, we are going to a smaller place, and it's going to be a lot cheaper, way cheaper. But I just feel like it's a little bit better, especially financially too. We're paying over 2 grand a month now to be able to even be in this office. Um, it's just a waste, basically. Waste of money. All right, enough chatter. Let's get right into it. And let me start sharing my screen. All right, you guys should be able to see my screen. Let me know if you can see everything. Oh, let me close up my email actually, because I have a lot of private things in there, like gambling addiction for one. No, I'm just kidding. All right, let's do. What do we do? What do we do? What do we do? So Euro USD actually, that's one of the only pairs I rarely do. Euro USD, Euro USD, CG, and let's just throw that on there, and we'll do 2016. How's everyone's summer so far, by the way? You guys enjoying the summer? I'm gonna pull up the chat in just a second, guys. Let me just set that to 2016, December 31st. Back at work now at 4 weeks off. Damn. Let me put it like that. What do you do for work, Rick? All right, let's get started, by the way, guys. Going to be doing it like we did in the old days and just literally um, basically explain everything that I do, every setup that I take, why I'm taking it, why I might not be taking certain setups. But do keep in mind with everything that I do that I have been doing this and I am doing this for over 6 or 7 years now. I've been doing this exact same strategy for years now. So do not make any irrational changes based on what I'm doing here. Do not change up your strategy because you see me doing something. Do not change up anything without testing it yourself first, because ultimately, um, it's all it's your strategy. If that makes sense. Rick is an electrician. Oh, that's pretty cool. That's pretty cool, actually. Okay, let's get started. So, first of all, um, this setup right there, some people might classify that as a low probability setup because of the reason that it has liquidity laying above it. Me, myself, I'm a little bit more aggressive, and it shows in the fact that I do take a lot of losses as well. I'm going to be taking a loss there. TJ asked, do you use the same trade assistant as Andre and JB? I believe I do. I couldn't tell you. I think I do, yeah. Not 100% sure actually, but I'm fairly sure that I do. All right, let's continue. Right now, the next setup over there. Gotta wait for a little bit of a retracement. We don't get that. This is one of those setups that I do think is a little aggressive because it's so small basically. And I've been using the analogy of a pillow a lot. And I know it may sound ridiculous, but it has helped people a lot. The analogy of a pillow. So basically, this is a very thin pillow, so it's not really going to bounce. This is a little bit more of a thicker one. I always come up with the weirdest analogies, but they do tend to help people out. So as long as they work. For some reason, FX Replay adjusted the whole break even thing. Like it'll say 1.18 all of a sudden. I don't know why. Okay, it's a break even. On to the next. A little tip for you guys too, by the way, because I do get this a lot. If you are backtesting, always take a quick look at your previous trades, just because it's really easy to get lost in the level of zoom that you're maintaining. Like some people will zoom out like this, and then the next day they'll zoom in like this. Always make sure that it's consistent, you know, that what you're doing is consistent and you're continuously looking at the markets the same way. Okay, FX replay is lagging right now. Break even. That's another break even. Okay, so two ways of taking that. You could take that from the top one if you're a little bit more conservative. If you're a little bit more of an aggressive trader like myself, you're going to be taking that from the more recent high. Say break even. High break even trade. So what I think is really important, what I've been noticing the past couple of months with traders is people underestimate data in the sense that it's really easy for people to want to adjust things. Right now we are in the summer months. Obviously the summer months tend to be a little bit slower. There's a lot of people who will make changes to their strategy as soon as they take a few losses. Now, the reason why that's dangerous, in my opinion, I missed that. I was going to take that, but let's see if we come back to the entry before hitting break even. The reason why that's dangerous is because you can't really draw any conclusions based on just a couple of trades. So I always use the analogy of an ice cream store. This one would be deleted because we hit break even and I missed the entry. So whether that's a win or a loss, I missed that trade. So the reason that would have been a break even, why that's dangerous is because I use the analogy of running an ice cream store, right? Or running an ice cream shop. Let's say it's the summer, but then you have a few days in which you expect a lot of customers, but you don't get any. Does that mean you're instantly going to change signs? No, because it might just be the weather. You know, it might just be the fact that they heard that it's going to rain on the news, so they're not feeling like going to the ice cream store. So don't instantly make changes based on things that are outside of your reach. Like if the market just randomly starts to go sideways, don't start making changes. And that's what a lot of people tend to do because we feel like we have to make changes to what we're doing in order to become profitable, which is not necessarily the case. By the way, two ways of taking this trade. You can take it from the lower one, meaning that you have a higher probability of winning it, but also a higher probability of missing out on it. You can take it from the more recent one, meaning that you have a lower probability of winning, but basically you're going to be staying in or you're going to get a high frequency. So this time we lost that trade. And the more conservative one would have won. No, would never have tapped you in. TJ asks, do you care with the imbalances in the range? No, I don't. I don't really care. I genuinely believe that the best thing you can do is just keep everything so mechanical and so simple. I had a talk with someone today, and basically we spoke and we said that, okay, the number one thing, the best mechanical edge that you can have is 20,000 trades a year with a 27% win rate. If you had an option to pick between 100 trades a year with a 50% win rate or 20,000 with a 27% win rate, then the latter one would be a lot more profitable. It just goes to show that people have an obsession with win rate. Meanwhile, that's not the thing that's driving profit. And I know, I think Rick, you sent it in today about the whole idea of picking between correlated trades. I know that a lot of people do it. I saw someone send it in today. And it just goes to show that correlation. Did Rick send this? Yeah, he did. Correlation is one of those things that people create an obsession with having to skip out on, for example, this trade because it's ugly, whatever. Meanwhile, statistically, that's not what you're going to be aiming towards, right? It's not about looks. It's kind of like relationships, guys. Not that I'm an expert on one. Don't listen to me for relationship advice, by the way. Never listen to me for relationship advice. I'm not the best example. So a couple of questions I've been getting to is about liquidity. Liquidity, in my opinion, I don't know if John or Andre will agree with this, so take it with a grain of salt, but liquidity, in my opinion, is subjective. I believe that everything can be seen as a liquidity grab. So I'm not too focused on it. I'm not too strict when it comes to liquidity grabs. I'm a little bit more like, I just like to be a little bit more aggressive. So my trade frequency will also be a little bit higher than maybe John or Andre's, but liquidity, in my opinion, is subjective. It's not something that's to be taken so literal, in my opinion. So this trade, fairly simple. We got our high, our low, our break to the upside right here, and plenty of imbalance, as we can see. All right, so for some reason it keeps messing up the auto break even thing, which is really frustrating, but that's okay. This is a good example too. A lot of people will be like, what if the trade's coming back so slowly? And honestly, for me, it's fine as long as it's not dragging out for multiple weeks on end. So right now you can see that it's dragging out for way too long. So we'll delete that trade. Also, the fact that it got relatively close to my entry, but then pretty much hit my break-even level means that I do not want to be involved in that position anymore. All right, let's continue. So once again, don't forget, make sure to zoom in back to the level that you were using before, because it's really easy if you're in a larger trade to get zoomed out and then just keep doing that every now and then eventually you're looking at the chart like this and not like this. And it doesn't really matter which one you do as long as you stay consistent. The one thing that I don't want to see you guys do is look like this and then the next day look at it like this. That's the one thing. You just got to be consistent in your approach with that. And like I said, the tip that I like to give people is to always just look at your previous trades before testing, basically. A little bit of an aggressive trade, this one, but it is valid for me. How many people do you have in here today, actually? Let me just take a look. I am curious. 6 people. That's not too bad. There's ups and downs to the fact that it's a little quiet in here. The upside is that there's no random babies in the background screaming. And the downside is that there's not as many questions. So there's usually less things for people to learn from, which is a little bit unfortunate in my opinion. That's okay. So I got someone in my DMs the other day, which I think is something we can learn from, who asked me if I could look at one of his sessions. He said, the reason why I want you to look at one of my sessions is because I had a losing pair, and that pair performed really poorly. I had shit results, basically, is what he was saying. And what do you guys think? Let me ask you this before I answer it. What do you guys think about a losing pair? Is that something, like, what do we have to do about a losing pair? Let me ask you guys before I answer it. What do we do about a losing pair? Let's see what Rick's going to say. I am curious. It's a break even, I believe. Yeah. For how long, such how many losses. Gotcha. Okay, so the way I look at it is, let's say you have 28 pairs in a year, or 28 pairs in general, and you want to make 100 R. You can still afford to lose maybe 8 or 9 pairs and not get into any trouble. So I like to show this data, as you guys know, from one of my clients, slash one of the people who works with me. His name's Nikki, and I'll pull up his data, and you'll see that, oh, actually, it's over here. You'll see that some of his pairs are losing. He's got, I think, 100 R in 2016, something like that. Yeah, okay, 83 R in 2016. But then if we go and take a look at the losing pairs, we're going to count how many there are. Okay, so we see, let's look, 1, 2, let's see, 4, 3, 2 to 4, 3, 4, 5, 6, 7, 8, 9, 10, 11 out of the 28 pairs that we tested are unprofitable. But we still ended up making, now that this one's finished too, almost 500% in 5 years. So that's 100 R every single year. Even though we had 11 losing pairs. And that's the realization that a lot of people don't have, that you will need to fully understand if you're going to go into full-time trading. Even if you have 3 losing months in a year, that's fine. Like, that's totally fine. There's nothing to do about it. As long as you don't start to create an obsession with winning and then being afraid of losing months. A lot of people will change things up once they get a losing month. That's just not the way it works. You understand that there's traders who've been doing the exact same strategy for years, and they've had losing months, sometimes 4 losing months in a year. Are they losing all of the 5 years or only 1 year? No, only 1 year. So UJ, for example, might be unprofitable in 2016, but then it might be very profitable in 2017. That's why you cannot really draw any conclusions based on just 1 year. A lot of people will base it on sample size too, which is another thing I'll get into in just a second. Once I let this trade play out, we'll get into that. So far, not a lot of trades on this pair, actually. So I'm going to say something, and I want to ask you guys what you think I mean by it. Sample size is not the most important thing when backtesting. And why do you guys think I'm saying that sample size is not the most important thing when backtesting? Might be a little tricky, so I'm gonna give it a minute, but then I'll answer it. Think about it. Why is sample size not necessarily the most important thing with backtesting? I don't see anyone typing, so I'm gonna say it after we see what happens with this trade. Okay, let's see what happens here. Get close to entry, close to target. Gonna delete that. We'll let this trade play out, and then I'll tell you. Okay. Let's say I have 1,000 trades in my data set. Am I now confident in my strategy? Maybe, but also maybe not. Why? Because there's a really good chance that I'm one of the most aggressive traders, and I tested those 1,000 trades all within a span of 2 months. So now, yes, I do have a large sample size, but I don't have any time span of no idea of how my summers are going to play out, no idea of how my springs are going to play out, my winters, like all of that stuff. That's what matters. It's a combination of, yes, of course, sample size, but mainly the time span. You want to see how your strategy performs, not 1,000 times, but you want to see how it performs the past 5 years on all 28 pairs. That's what you want to see. So sample size is important. It's not the most important thing, which a lot of people do think and do get wrong. It's not the most important thing, really. So keep that in mind when you are going to be backtesting. It's not necessarily about getting to 1,000 trades as quickly as you can. It's about getting to 2 or 3 years of data, really, like 2 or 3 full years of data. That's what it's about. What do you guys think is the biggest difference in your own trading that you have discovered or learned the past year or the past months since you've joined us? What do you guys think is the biggest discovery? June tends to be a little choppy, not always, but usually June and July are known for being a little choppy. It's because there's less volume in the markets, just because everyone's on vacation, obviously, and a lot of the banks are closed. So there's just a lot less volume in the markets. You guys must have noticed. Still, I don't like to just say that and then leave it at that. I always like to tell people, like, yes, summer months might be slower, but you might still be extremely profitable. Test, basically focus it or base it on your data. Okay, TJ says some pairs can be rubbish for an entire year, but you can still be profitable overall. In the past, I would have been tempted to switch strategies if I had bad results for a pair. That's, yeah, you and everyone else. So I spoke to John today, JB, you guys know him, obviously. And we were changing things up. We were improving our strategy PDF, basically the one that people get for basically seeing our strategy. And one thing he mentioned too is, simplicity ultimately, or complexity leads to confusion, which then leads to you becoming frustrated with the results, which leads to you wanting to change things. So as soon as you accept basically what Rick is saying right now, as soon as you accept that losing is part of it and you don't really have to give a fuck about your trades, oh shit, there goes my YouTube money, guys. I swore, so now my YouTube money is gone. But as soon as you accept that you don't give a fuck about your trades, it makes it a lot easier. You're bad. Yeah, you owe me 50 cents now. All right, that's close to entry. Then hit break even, deleting that. My biggest discovery since joining has been realizing that trading is ultimately a game of probabilities. Once I truly understood this, it changed the way I look at wins and losses and overall the strategy. Awesome. Well, I'm happy to hear that. I'm really happy to hear that. I'm happy we were able to give you that insight. This is a valid trade. It's a little aggressive, but it is valid. It's kind of like I mentioned, the pillow thingy about this one being a little bit of a weaker pillow. I remember you saying we have to learn not to give a fuck on one of your old streams. It helps. I'm glad you watched some of my old streams. I appreciate that. I want to learn how to trade ICT. Well, you're in the wrong place for that. I do know the entirety of ICT. I know everything about ICT. I just never used it because I'm not saying it doesn't work, but a broken clock is twice right is right twice a day, right? That's kind of what I'm saying. Like, yes, obviously it's going to work every now and then. But is it going to consistently work year after year, month after month? And if so, do you have any data to back that up? Because if that's the case, then by all means, if it's the most profitable strategy out there, and you can make $50,000 a year, and you have data to back that up, by all means, I'll use it. But like I said, a broken clock is right twice a day. That's honestly my opinion about ICT. I believe everything can work, you know. I spoke to one of our students today, and he said he had an edge in poker, which was only a 4% edge, which works because he had a massive sample size. And he's an insane poker player. And it's just crazy because, you know, he found an edge, and there's so many things that give you an edge. You saw your track record on YouTube. Are you up 138% for the year, or am I missing? I'm not up 138% for the year. I'm not sure where you saw that. 138% for the year? You talking about my FX book? Oh no, that's a shared account. The my FX book is the one you're talking about, right? Yeah, no, that's a shared account. So that's not just my portfolio. That's a combined portfolio. Oh, I am up 38R so far. Although this month has been, got a journal. I'll do that on Friday, but this month has been very rough for me. I did blow one of my 100K accounts, but that's okay because it was Alpha Capital Group. So fuck them. This is a really good pair so far. I'm always so focused on testing the minors that I just forget to test the majors. Sometimes the majors, they perform really well, and I just forget because I'm always focused on testing cross pairs like UJ and Euro GBP, whatever. It's funny because I've coached a lot of people now, and the number one thing, the hardest people to, or the hardest thing for people to basically change is to no longer look at the market with such a detailed eye. No longer look at the market as there being liquidity everywhere, and which is true. Obviously, there is liquidity everywhere, um, but it just makes it so complex for you to become consistently profitable. It makes it so difficult to become consistently profitable if you're always focused on getting the highest probability. The way I see it, another analogy that I like to use is you can be a sniper in the army, for example, and you can be focused on taking your perfect shot, and there's a really good chance that you'll hit it. Or you can just spam out, be the machine gunner, spam out a million shots, and there's a guaranteed chance that you'll hit some of them. I personally prefer the second option. Maybe that's where the idea of sniper entries comes from too. I don't know. It's a loss. Sometimes I'll miss trades because I'm skipping forward too fast. Some people will go back. That's fine. You can replay to this date. That's fine. But don't sugarcoat anything, because I know it's fun and all, but the only person who gets fucked over when you're doing that is you. There's really no point in doing that. I think this one would have hit break even, so I'm not going to turn to that one. I mean, yeah, you can do that, but ultimately, nobody benefits from that, right? We did have people in the past who loved to sugarcoat their backtested data, but there's just really no point in doing that. I didn't know that either until recently, actually, TJ. Someone told me that. I'm learning a lot about this platform. I'm the one paying for it, so that's crazy. I'm the one paying for it, and I barely even discovered half of its functions. I've had sessions where I've been too tired. I missed so many. Oh, it's I think it might be relatively new too. I'm not sure. I didn't know about it until recently either, but I think it might be relatively new. See how throughout the session I've been able to keep a somewhat similar zoom level the entire time. I haven't really gotten too zoomed out. I haven't really went too zoomed in. It's been fairly consistent throughout this entire session. That's so underlooked. So many people skip out on that, but your zoom level has to be consistent. I know it's a ridiculous concept. It sounds like a ridiculous concept, but it's more important than breaker blocks or whatever the fuck. Making sure that you keep the same level of zoom on the markets. Right now I am missing out on a couple of trades too because I'm a little bit slow. A little bit tired, I mean. That would have been a break even. You guys in any trades right now? I am in UJ right now. UCJPY. And December 15th is when I always stop trading. As you guys know, I never trade past December 15th. Here we go. Show the analytics. They are pretty decent, actually. 50% win rate, 21 trades, 7 break-even trades, and a few losses. Not bad at all. And what do you guess? 1, 2, 3 losing months, and 1, 2, 3, 4 break-even months, and then the rest is all profitable. There you go. Not bad. Order on GU. Let me take a look. Let me take a look for you. I'm in UJ right now. I have a bunch of pending orders right now. Waiting on CHF AUD did not get tagged in on that one. Waiting on GBP AUD right now. Waiting on GBP NZD, which is pretty much the same trade. I am in Euro GBP right now. CAD CHF, that's a break-even trade. I did not get tagged into that. Euro USD, waiting on that proper breaker structure, and then I'll take that long position. And GBP CAD waiting on a trade. NZD CAD was waiting on that one, but it seems like it might have started to create a new range. So I'm going to be deleting that. USHEP, this trade, and GU, that trade. So that's it. Leave GU pending, and you're in on USD CHF. Gotcha. All right, you guys, I think that's it for today. Thank you guys for tuning in. I'll be back next week. In the meantime, if there's any questions, reach out to me. But thank you guys for tuning in, and enjoy the rest of your evening.